In this video, we are going to talk about Microvast and its confirmed merger with Tuscan Holdings Corp. We will cover what the company does, its economic outlook, and my recommendation about whether you should buy the shares. Before today's video begins, if you like my channel, please like, comment, and subscribe. Also, if you're interested in stock analysis similar to this one, please check out my channel for more. Microvast is a Chinese battery company founded in 2006. It has been manufacturing energy storage solutions for zero-emission vehicles, data center, and electric device. Its appeal to investors are similar to the reason why they are interested in NIO. So, Microvast is a company that is positioned in one of the hottest sectors at the moment and operating within probably one of the most valuable EV market in the world. EV vehicles are expected to grow significantly within the years and decades to come, especially within the region of the world, given that both China and Japan have laws that will significantly restrict the sales of combustion engine vehicles 10 or 20 years from now. Manufacturers of batteries have the advantage of covering a very large market while avoiding the competition and, I would even argue, cannibalization between different car manufacturers. As long as the market is growing, the value of Microvast will likely to increase. Now, before I go further, note that I am talking about the stock value of the company. The financial market will react to sentiments, and by the time the fundamentals confirm those sentiments, the stock price may not react to it because the expectation is already priced in. Regardless of whether the targets will be met, it will depend on how high those targets are set and if the external factors can be controlled. The current assumption is that Microvast may be making EV batteries for many car manufacturers, including NIO, Tesla, Li Auto, and so on. It doesn't mean that those companies will necessarily be on board, since it is only the expectation of the market at the moment. Something similar happened with LiDAR startups a few months ago. Those SPAC stocks surged sky high on the expectation that their technology and products will be bought by car manufacturers, before those same car manufacturers such as Nissan and Tesla began announcing that they will either develop their own LiDAR technology in-house or that they will develop an alternative technology altogether. Of course, I still think that there will be demand for companies that do not have their own platforms yet. For example, when Fisker announced their Fisker Ocean, they were going to use Magna to manufacture the vehicle for the most part. Same with Nikola when they decided to manufacture their vehicles with the facilities of General Motors. This is why I think that there will still be a lot of potential demand for Microvast going forward. Another advantage of Microvast is that it already has a track record. Unlike many other startups that only recently went public, Microvast was founded in 2006 and has existing products that are already being used. Its battery-powered buses and public transports in South Korea during the 2018 Winter Olympic Games. This does give Microvast an extra layer of reliability in the eyes of the potential shareholders, especially when we compare it to companies that have yet to produce their advertised products, such as Nikola, Fisker, or even Hyliion with regards to the ERX. Now, let's take a look at the financial context surrounding the company. Microvast will go public via a special acquisition company called Tuscan Holdings Corp, which is part of Early Bird Capital. From my understanding, Early Bird is a private bank specialized in setting up SPACs and has several SPACs that have successfully merged with startups. One of the examples is Tattooed Chef, a plant-based protein food company and competitor to Beyond Meat. The merger will also have involvement of prominent participants, such as Coke Strategic Platforms and Interprivate. It suffices to say that the merger happens within an environment that is very well experienced, well funded, and with a company that has made its mark in this growing industry. When we look at who are the participants backing up Microvast, we see that both the total shares held, percentage of ownership, and the number of funds interested in backing up the shares have been increasing. Some of the prominent shareholders include Goldman Sachs, Credit Suisse, Citigroup, and BMO. This means that the market consensus is that Microvast is a robust company with a proven product, and that it is set to become an important company within the sector in the years to come. There have been some significant price movements to the stock over the past few days and hours. The stock is currently trading around 25 hours after the confirmation of merger between the startup and Tuscan Holdings. In less than 2 months, the stock price has more than doubled. Under normal circumstances, I would consider the stock to be overbought and waited for a stock correction before entering the trade. However, we are currently in an irregular trading situation, to say the least, so it would require us to manage the stock differently. Now is a very good moment to talk about the concepts of risk control, because it'll likely make or break your position in this stock in particular. If you dump a significant portion of your portfolio balance in stocks such as Microvast, the stock price fluctuation will not be greater than other stocks in the same category. However, your mental fluctuation and risk tolerance will be greatly affected by how much Microvast shares you just bought, and would be more likely to cut the position at the wrong price, because the pressure may be too great. The current market conditions may not give investors the time to get in at a decent price, so the importance of risk control is even larger, because you know that the price at which you enter the stock may be a bad one. This is why it is important to be disciplined, stay focused, and not getting affected by emotions. It is a lot easier to do this when your exposure is not high and your position is built in time, not in one shot. Even if you may give up on some gains, assuming the stock price does go higher, you would not give up your ability to analyze the situation objectively, which is crucial in trading. My recommendation is to buy the stock now at the market price, but to leave at least 50% of your allocation for later when the price corrects. Because I think that the company will grow larger than it is now, I would recommend to hold at least part of it for the long term, at least within the upcoming 12 to 24 months. The reason why I think that would be a good idea to hold is because Microvast is confident that it'll make $100 million in 2021. Although we do not have the previous amounts, it is likely going to be a huge jump compared to its current operations. I believe that if they come even near this target, the market will react very positively to the developments and will push the stock price to higher levels. Because this stock has a proven business model and has a track record, I would recommend to allocate up to 5% of your portfolio in this stock. Thank you for watching. If you like my channel and would like to watch other stock analysis videos, please like, comment, subscribe, and check out my channel.